Good news has just come through from number 10, and if you're receiving the state pension or approaching retirement age, you'll want to hear every word of this update because it affects your income directly starting in the new financial year. And we've also got the confirmed payment dates for October 2025 that you need to mark in your calendar right now. Keir Starmer's government has officially announced a state pension increase, and this is something that millions of pensioners across the United Kingdom have been waiting to hear confirmed. The Prime Minister stood firm on the commitment to protect the triple lock guarantee, which means your state pension will rise in line with whichever is highest among three key measures: the growth in average earnings, the increase in prices as measured by inflation, or a baseline of 2.5%. This policy has been a lifeline for pensioners over the years, ensuring that your income doesn't fall behind the rising cost of living. And despite all the speculation and rumors that circulated in recent months about potential changes to this guarantee, the government has kept its word. For those who might not be entirely familiar with how the triple lock works, let me explain it simply because it's crucial to understand what protects your pension income. Every year, the government looks at three figures: how much wages have grown across the country, how much prices have increased based on inflation, and that guaranteed minimum of 2.5%. Your state pension then goes up by whichever of those three is the largest number. This year, wage growth has been the determining factor, which means pensioners are seeing a meaningful increase that reflects what working people have experienced in their pay packets. It's designed to ensure you're not left behind economically, and it recognizes that after a lifetime of contributions through national insurance, you deserve financial security in your retirement years. Now let's talk about what this actually means in pounds and pence, because that's what really matters when you're managing your household budget. If you're receiving the full new state pension, which applies to those who reached state pension age on or after April 2016, you've seen your weekly payment increase to over £220, which adds up to more than £11,000 annually.
For those on the basic state pension, which is for people who reach state pension age before April 2016, the full amount is now over £160 per week, working out to more than £8,000 a year. These aren't small increases we're talking about, and for someone living on a fixed income, every additional pound makes a real difference when you're facing energy bills, grocery costs, council tax, and all the other expenses that seem to climb higher every year. I know many of you watching have told me in the comments before that you're carefully watching every penny, trying to make ends meet, and this increase, while welcome, might still feel like it's playing catch-up with the actual cost of living you're experiencing day to day. The October payment dates have now been officially confirmed by the Department for Work and Pensions, and it's essential to know exactly when your money will arrive in your account so you can plan accordingly. State pensions are typically paid every 4 weeks on the same day of the week, and the exact day you receive yours depends on the last 2 digits of your national insurance number. If your national insurance number ends between 00 and 19, your payment day is Monday. If it ends between 20 and 39, you'll be paid on Tuesday. Those with numbers ending between 40 and 59 receive their pension on Wednesday, and if your number ends between 60 and 79, your payment arrives on Thursday. Finally, if the last 2 digits are between 80 and 99, you get paid on Friday. For October specifically, you need to note these dates in your diary or calendar because if you're expecting a payment and it doesn't arrive when you think it should, it can cause unnecessary worry and stress. Most pensioners receiving their state pension in October will see payments landing in their bank accounts on the standard scheduled days unless there's a bank holiday that causes a slight adjustment, which the DWP always manages by paying you earlier rather than later so you're never left waiting. What's particularly important to understand is that this increase isn't just about the state pension itself, because many other benefits and pension-related payments are linked to the state pension rate, which means when your state pension goes up, other elements of your financial support might increase as well.
Pension credit, for example, which is an absolutely vital benefit that far too many eligible pensioners still aren't claiming, has also seen its rates adjusted accordingly. Pension credit is designed to top up your income if you're living on a low income in retirement, and it comes in 2 parts: guarantee credit, which brings your weekly income up to a minimum level, and savings credit, which is a bit of extra money for people who saved some money toward their retirement but still have a relatively modest income. The current guarantee credit amount for a single person is over £200 per week, and for couples it's over £300 per week. If your income falls below these amounts, pension credit will make up the difference. And here's the crucial part that I cannot stress enough. Claiming pension credit isn't just about the money itself, although that's obviously important. Once you're receiving pension credit, you automatically become eligible for a whole range of other support, including help with housing costs, council tax reduction, heating support during winter, free TV license if you're over 75, help with NHS dental treatment, glasses, and prescriptions, and various other benefits that can make a significant difference to your quality of life. The government estimates that hundreds of thousands of pensioners who are entitled to pension credit simply aren't claiming it, and that represents millions of pounds of support going unclaimed every year. Some people don't claim because they think the amount might be too small to bother with, others find the application process intimidating, and some simply don't realize they might be eligible. If you're living on the state pension alone or your total income is relatively modest, I would strongly encourage you to check whether you might qualify for pension credit because you've paid into the system all your working life, and there's absolutely no shame in claiming what you're entitled to. The application process can be done over the phone by calling the Pension Credit Helpline, or you can apply online if you're comfortable using the internet, and there are also local advice services and charities like Age UK and Citizens Advice who can help you through the process if you need support. When you apply, you'll need information about your income, any savings you have, and your housing costs, but the staff are there to help you and they're used to talking to people who might feel nervous about the process. Beyond pension credit, it's worth mentioning that if you're a pensioner household, you should also be aware of other support that might be available to you. The Warm Home Discount Scheme, for instance, provides a one-off payment during winter to help with energy bills, and eligibility is based on whether you're receiving certain benefits including pension credit. Council tax support is another area where many pensioners can get help, and this is administered by your local council rather than the DWP, so you need to contact your local authority directly to find out what support might be available in your area. Every council runs its scheme slightly differently, but many pensioners can get a significant reduction in their council tax bill or even have it covered entirely if their income is low enough. Housing benefit is still available for pensioners who are renting, even though it's been replaced by universal credit for most working-age people, and again, if you're on pension credit, you're likely to be eligible for help with your rent costs. I want to address something that causes a lot of confusion and concern among pensioners, and that's the difference between the state pension increase and the overall financial picture you might be experiencing. Yes, your state pension has gone up, and that's genuinely positive news, but many of you have shared with me that other costs have been rising even faster, particularly energy bills, food prices, and council tax. It's frustrating when you see your pension increase announced and it sounds like good news, but then you realize that your energy bill alone has eaten up that increase and more. This is the reality that many pensioners are living with, and it's why benefits like pension credit and the other support schemes I've mentioned are so important, because they can help fill that gap. The government has also faced criticism over the past year regarding the winter fuel payment, which was previously paid to all pensioners but has now been restricted to only those receiving pension credit or certain other means-tested benefits. This change has been controversial, and I know many of you feel strongly about it because that payment helped with heating costs during the coldest months.
The government's position is that support needs to be targeted at those who need it most, which is why they've emphasized the importance of claiming pension credit if you're eligible. But I understand that for those who were receiving the winter fuel payment and no longer qualify, it feels like a step backward even as the state pension itself increases.
Let me explain what means tested actually means, because it's a term that gets used a lot and it can sound complicated. A means tested benefit is simply one where your eligibility depends on your income and savings rather than being paid to everyone in a certain category. The state pension itself isn't means tested, which means everyone who has made enough national insurance contributions receives it regardless of whether they have other income or savings. Pension credit, on the other hand, is means tested, which means the government looks at your overall financial situation to determine whether you qualify and how much you should receive. Some people feel uncomfortable with means tested benefits because they worry about having to share details of their finances, but the reality is that these benefits exist precisely to help people who need support, and the assessment process is designed to be fair and take into account your individual circumstances. If you've worked hard all your life and saved what you could, you shouldn't feel that means-tested benefits aren't for you, because the income and savings limits for pension credit are set at levels that recognize you might have some modest savings and still need support to live comfortably. Looking ahead to the rest of this financial year and beyond, there are a few things pensioners should keep an eye on because the pension landscape continues to evolve. The state pension age itself has been a topic of discussion, and while there are no immediate changes announced, the government periodically reviews the state pension age in line with life expectancy trends. Currently, the state pension age is 66 for both men and women, and it's scheduled to rise to 67 between 2026 and 2028, and then to 68 at some point in the following decades, though the exact timing of that increase has been debated. You're approaching state pension age or you're planning for retirement, it's worth checking your own state pension age because it might not be the age you originally expected based on older rules, especially if you're a woman who experienced changes to state pension age in previous reforms. You can check your state pension age and get a state pension forecast online through the government's website, which will tell you exactly when you'll be eligible and how much you can expect to receive based on your national insurance record. This forecast is really useful for planning because it shows you whether you have any gaps in your national insurance record that you might be able to fill by making voluntary contributions, which could increase your state pension amount. For those of you already receiving your state pension, the October payments represent another regular monthly or 4-weekly income that you've come to rely on, and the increase that's been applied means you should see slightly more money arriving in your account compared to earlier in the year. It's always worth checking your bank statement when the payment arrives to make sure you've received the correct amount, and if you notice anything that doesn't look right or if your payment doesn't arrive when expected, contact the pension service directly rather than worrying in silence. They're there to help, and most payment issues can be resolved quickly once they're aware of the problem. Sometimes payments can be delayed by a day or two due to bank processing times, especially around weekends or bank holidays, but if your payment hasn't arrived within a few days of when you expected it, that's when you should make the call. I'd love to hear from you about how this pension increase is affecting your household budget and whether you feel it's keeping pace with your actual living costs. Are you managing reasonably well, or are you finding that despite the increase, money is still very tight? Have you looked into pension credit or other benefits you might be entitled to? And if you have claimed these benefits, was the process straightforward or did you face challenges? Your experiences help other viewers who might be in similar situations, and there's a real sense of community in the comments where people share advice and support each other, which is one of the things I value most about this channel. If you have questions about your own pension situation or there are topics related to state pension, pension credit, or other pensioner benefits that you'd like me to cover in future videos, please let me know because I create this content for you and I want to make sure it's genuinely useful and addresses the real concerns you're facing.
This state pension increase and the confirmed October payment dates are part of the ongoing rhythm of pension administration. But behind these numbers and dates are real people trying to live with dignity in retirement after decades of work and contribution to society. Every decision about pension rates, benefit eligibility, and payment schedules affects real lives, real budgets, and real decisions about whether to turn the heating on or buy that bit of extra shopping. The triple lock guarantee has provided important protection over the years, and maintaining it shows recognition of pensioners' needs. But the broader conversation about pensioner poverty, the cost of living, and adequate retirement income continues. As we move through the remainder of this year, stay informed about your entitlements. Don't hesitate to claim what you're owed, and keep an eye out for any announcements from the DWP or the government that might affect your situation. Things do change, sometimes with limited notice, and being aware of what's happening helps you plan and make informed decisions. Check your payment dates, verify your amounts when money arrives, and if you're struggling financially, reach out to the advice services that exist to support pensioners because you shouldn't have to navigate these systems alone. Take care of yourselves, look after one another, and I'll be back soon with more updates on everything affecting UK pensioners and the support available to you.